Good morning to those who have joined thus far. We will start in just a minute. Appreciate you being here this morning to talk about this uh, now complicated topic. Oh, yeah,
Jonathan, do you
I see the
see?
question in the chat. Yeah, so if we have questions after this webinar, can we email you? So certainly you'll be able to consider me as a resource that you could reach out to. However, Um, by the time we end this webinar, you'll have multiple resources that I think will be better fits for you to reach out to that can actually, they have the capacity and resources to support folks who are in student loan repayment. And you'll have multiple options for that. So I think those are going to be your top options. And then, of course, as the presenter of this webinar, I also will be an option for you to reach out to as well. But there will be lots of other resources you can use that are probably a better fit. But we'll get to that. Great question. I love it. All right. So given that it is 10:01, we will go ahead and get started and assume that others who have registered will join us along the way. So let's do that. All right, so today we're here talking about managing student loan repayment. As I mentioned a second ago, student loan repayment has become much more complicated than it has been in years past and is certainly more complex than other debt that people may hold when it comes to repayment. So we're looking to cover the high points related to it today. My name is Jonathan Ferguson. I am a financial capability specialist at UW Extension. I also am a certified financial planner, which shorthand means I am a money nerd and I study these things and I really enjoy talking about them and supporting people through understanding them. And so that's why I'm happy to be with you here today to kind of talk through this. Um, Student loans are also something that are, I guess, pretty close to me when I graduated college back in 2007. Hard to believe it was that long ago, but it was. I graduated college with about $40,000 in student loan debt. And just managing the process of being able to repay those loans was complicated for me then as someone who was not into money at the time. But I've sort of had an evolution as I think about money and finances over my life. So I've gotten to this point where it's a core thing that I talk about and support people with. So now that you know a little bit about me, I'm going to ask if you might take a minute or so and tell us a little bit about yourself. So, this is an anonymous survey that we ask our participants to complete at during our programs because the more we know about our participants, the better we can serve them and the state of Wisconsin. So, if you would not mind, we would greatly appreciate it if you either scan the QR code or went to the link that's there on the screen, which will ultimately uh, be able to get in the chat as well, possibly to take a minute to go ahead and do that.
Oh,
Any luck, Jenny?
yep, I'll get it in there. I
All right.
was just a moment. Yep.
Thanks, Jenny. Much appreciated. So yeah, I'll give you all, don't want to rush you through that, so I'll give you about another minute since some folks just got that link. So when folks are done, feel free to type done in the chat so I have an understanding of where folks are. It's a pretty short survey, so it shouldn't take too long. All right, so we got a few folks who have mentioned they're done. Thanks. All right, so if you need to finish that up, please go ahead and do so. But for the sake of time, I will move forward to our next slide. So first and foremost, I wanted to start this with an affirmation of sorts. So I'll read this on the screen because I really think those who are in student loan repayment and looking to understand it, um, like it can feel like it's something you should understand, but you're just not grasping it, and it seems so complicated. So I'll just read this. It's normal to be confused by the current state of student loan repayment options and rules. The options are complex and have been in a constant pattern of change since 2020. As we all know, our world was impacted greatly by the pandemic in 2020, and as a result, there were lots of economic changes. Some of those economic changes had to do with student loans, and there's been a lot of changes in the last 5 years related to student loan repayment, which student loans are available to people, so on and so forth. So we're having this webinar to go over these things because things are just that complex and they're constantly changing. So not only are they complicated, there are things that are sort of being decided on a monthly or yearly basis now, it feels like. So you are not alone if you feel confused. So today, that's why we're going to start with the foundation. We're going to look at the things that are most important for you to know. And you'll see some of those on your screen, student loan types. We're going to talk a lot about repayment plan options and then details and resources for current student loan borrowers to manage their student loan repayment. Um, and then we're also going to talk about things that are maybe not absolutely need to know, but things that you may want to know. So, some of us, when it comes to managing finances or just other things in our life, we're very detail oriented and we may want to know the details of things or actually just understand, well, why is it that way? So there's going to be some parts of the presentation today that go into that piece where it's like, this is a nice to know thing for folks who fit that category. If you're someone who's more of a bigger picture perspective when it comes to managing your finances and you don't necessarily want to look at the nitty gritty details of things, um, then I will call that out. So throughout the session, I will say, like, this is a need to know thing. Regardless of your mindset around student loans, you need to understand this. It's very important. And then for the other things, I'll just call those like nice to knows for everybody, but maybe need to knows for people who are really detail oriented. Because this stuff can get pretty confusing and detailed. And if you're not someone who usually exists in the details that way, then maybe that's something you can push to the side just to focus on the things that are paramount. All right, so another note at the bottom, I'll point this out. Student loan repayment plans for new future borrowers will differ than for current borrowers, and we will talk about that. So a lot of this session is focused on people who have already made their student loans, they borrowed, and they're in repayment. Obviously, student loans are important for people who are not there yet, but are going to attend college in the next 3, 4, 5 years into the future. The rules for those folks are going to be somewhat different than the rules for folks who are already in repayment. And these next few years is really going to showcase that. So I just want to point that out. We're mainly going to focus on details for those who are currently in student loan repayment, and we'll have some information about those who are going to be taking student loans in the future. Ideally, if you're someone in that bucket, you will be working very closely with a financial aid office of the institution or institutions that you are most considering. They are the ones who are going to be most up to date on ongoing rules and practices and laws around student loans at that time. But we will cover some of that too. Okay, so typically I don't show a video quite as long as this one, but this does a great job of summarizing a need to know. So you need to know the type of student loan or loans you have. Also, please note you'll get a resource list at the end of this webinar by email that has all of the resources that we're covering, including this video. So you don't need to memorize this, but it's important as an introduction to what we're going to talk about today, because it really is the foundation of understanding student loan repayment. So that said, I am going to play this video, make sure my sound is shared, and we'll come back afterwards.
Hi, my name is Kira Taylor, and I am a student loan expert at the National Consumer Law Center. The student loan system can be a complex topic for anyone to understand. Our goal is to make it easy for you to understand your options, regardless of the type of loan you have or the loan repayment stage you're in. No matter when you borrowed or what kinds of loans you have, this video is for you. Student loans are divided into two main categories, private and federal. Knowing what type of loan you have is key to managing your debt. Federal loans are issued or subsidized by the U.S. government, while private loans come from banks or other private lenders. Federal student loans are much more common than private loans and offer more protections. But let's start with private loans. Private loans come from banks or other private lenders and often have limited repayment options and protections. Private loans can have variable interest rates, meaning that the amount you owe could increase over time. However, state laws and statutes of limitations apply to private student loans, meaning that banks may have limits on when they can file a lawsuit to collect on old debt. Federal loans are much more common than private loans, and you, like most student loan borrowers, probably have federal loans. Federal loans have special legal protections and, unlike private loans, can be eligible for different repayment plans and forgiveness or cancellation programs offered by the government. But there's more to know about federal student loans because there are many different types. Today, the government only issues direct loans to new student loan borrowers, but it has offered other types in the past. Two common types of older loans are Federal Family Education Loans, FFEL for short, and Perkins loans. If you took out a student loan before 2018, and especially before 2010, it's possible that you may have a different type of federal student loan that is no longer being issued today. Different types of federal loans can have different owners or holders. Direct loans are all held or owned by the federal government. Some of the older loan types can be held by a third party. For example, FFEL and Perkins loans can be held by either the federal government or third-party lenders. FFEL loans can be held by banks or guarantee agencies, while Perkins loans can be held by schools. In addition, there are more subtypes of direct and FFEL loans depending on who borrowed them, what kind of educational program they were borrowed for, and whether the government subsidizes or pays a part of the loan's interest. A direct loan or FFEL loan can have either subsidized or unsubsidized interest. Similarly, other loan subtypes can be either FFEL or direct loans if the loan was taken out before 2010. For example, loans for undergraduate education, sometimes called Stafford loans, loans for graduate education or Graduate Plus loans, loans a parent borrowed for their child's education or Parent Plus loans, or consolidation loans, a loan that pays off a federal loan with a new federal loan, can all be either direct or FFEL loans if they were borrowed before 2010. It's important to know what type of federal loan you have because the type of loan can determine what kinds of relief programs you qualify for. There are different kinds of income-driven repayment plans and loan forgiveness programs that are only available for certain types of federal loans. If you have an older loan that's not eligible for the relief program you need, you can consider consolidating it into a direct loan. There's more information about when and how to consolidate your loan on studentloanborrowerassistance.org and studentaid.gov. Remember, federal loans offer more protections than private loans. Think carefully before refinancing your federal loan into private loans, because you could lose important benefits. Now that we've broken down the different types of loans that are out there, it's time to determine exactly what kind of loan you have. To find out what type of federal loans you have, you can log into your account at studentaid.gov. There you can see your loan types, servicer information, repayment plan, and loan status. Check out our other video, How to Use studentaid.gov, which shows exactly where to find this information. For private loans, you can check your credit report. Each year, you're entitled to a free credit report from annualcreditreport.com. For more information on your student loan rights, visit studentaid.gov and studentloanborrowerassistance.org, linked below.
Okay, so as I mentioned, knowing your student loan type is pretty foundational to understanding what's going to be the best way for repayment for you. So we have this slide here to provide a short summary of the things that were mentioned in the video. So we have loans still issued in 2025. Those are at the top. And then we've got a fairly long list of loans that have been previously available as well. And so you will have this slideshow as well as a resource list that includes that video to kind of refer back to. But student loan borrower assistance is a huge opportunity for those with student loans. Huge resource to be able to go on and learn more about it and to watch some of their videos. That was a good example of that. Okay, this is the next need to know. What is a loan servicer? So everyone with federal student loans is going to have a loan servicer, and that's a company that the U.S. Department of Education assigns to handle the billing and other services on your federal student loan. They also help you work and decide on your repayment options. So on the screen, you'll see a list of loan servicers. And I think at this point, we've got about 7 or 8 of those. Something to note about loan servicers is that they change sometimes over time. So you may have had a previous loan servicer that you no longer have, or you may be transitioned from one loan servicer to another in the future. So it doesn't necessarily mean you will always have the same loan servicer. That's why it's really important to have that account on studentaid.gov to understand when you have a question about your loans and you really want to understand details about them, your loan servicer is a great place to go. Caveat, and I feel like I would be remiss if I didn't mention this. At the current moment, if you contact a student loan servicer with questions about your student loans, there is a decent chance that you will have an extended wait in your reaching out to them. So if you're going to contact a student loan servicer, it's important for you to know that you need to set aside a certain amount of time to be able to effectively communicate with them and to get in contact with them. And because of that, that's why we're going to share some other resources towards the later part of this session, where it's like if you're just really struggling to get in contact with your student loan servicer, where else can you go to get another thought? And so student loan servicers at this moment, I would say block off at least an hour, but there are folks who are waiting to really get in communication with their student loan servicer for 1, 2, 3 hours. Because they're just so busy and just have not been able to meet the need, to be perfectly frank. But that's an expectation that I do want to mention. But it's important to talk with them because they're the ones who are going to be able to help you navigate your student loans as well, and they're dedicated to doing so. So you do need to understand that. So studentaid.gov is a great place to go for that. Okay. The next need to know. All right. So you need to know your federal loan type. You need to know who your loan servicer is. Those are the first two. Everybody should know this if you have student loans. The next thing you need to know is what your repayment goal is, because that's how you're later going to be able to decide which repayment option actually matches your goal. As I've mentioned, and in the video was mentioned, there are lots of options for repayment. And it can be really easy to kind of really get lost in the details of what all these plans are, which is the next thing that we're going to go into. Ultimately, though, before you can make sense of those things, you need to know what you're trying to do overall anyway, right? So are you trying to lower your monthly payment to the lowest amount that it can be? Is that your current goal? Are you looking to pay off by a certain date or pay off your loans as fast as possible? You want to know those things because that's going to help you as you have to navigate these options for student loan repayment plans next. So you need to know those three things: your student loan type, your servicer, and your repayment goal. Before you even look at any of these other plan details, you should have those three things like, yep, I know what those are. I feel really confident about it. Now let's move on to where the complexity can come into play. All right, so the first part we're going to talk about here are your repayment options. And as you'll see throughout this session, there are going to be three phases for repayment options. And right now, we're in that first phase, which is present until mid 2026. So July 1, 2026. These are the options that are available to student loan borrowers who are in repayment. There are standard, well, I guess I should say fixed repayment plans. And the idea about those repayment plans is that you're going to pay your loans off within a fixed amount of time. So you have the standard, graduated, and extended repayment plans. We won't go into those details yet. That's coming. And that's a nice to know for those who want to. So you don't need to know all the details of that, but it's a nice to know for those who want to. We also have income-driven repayment plans, which adjust based on income and family size. And so those repayment plans are going to be based on the annual income you earn and also who you're supporting. So there are now what I would call three active income-driven repayment plans: income-based, income contingent, and pay as you earn. There was a plan called the SAVE plan, which is, how can I sum it up? Stuck in limbo for a number of reasons. Those who were on that plan, if you're still on that plan, you're now accruing interest. You can no longer newly enroll into that plan because the pause is off. So that's why the interest is back. So SAVE is sort of in its own like category where it's inactive. So for a lot of people, it's going to make sense to switch to a different income driven repayment plan if they were previously or currently in SAVE. So you have those two categories: the fixed repayment plans and income driven repayment plans. That's what we have now. And so now we're going to go into the details for some of these. We're not going to spend a ton of time on each because it's so specific to the individual. But you've got your standard repayment plan. Everyone's eligible for that. So it doesn't matter what your background or your loan background is, everyone's eligible for the current standard repayment plan. You pay a fixed amount over an up to 10-year period. If you've got a consolidation loan, that's between 10 and 30 years. And that depends on a variety of factors. And then you have the eligible loans listed at the bottom. So this is the most open repayment plan that there is. where the intention is typically you're going to pay your loans off within a set amount of time. Those are the people who are interested in standard repayment. Next, you have graduated repayment. And all borrowers are also eligible for this plan. Payments are lower at first and then increase usually every 2 years. So your loans are repaid after 10 years. So you're going to see again that 10-year time frame. For consolidated loans, though, consolidation loans, you still have that extended time frame, 10 to 30 years, based on the factors of your specific loan. And you'll see the eligible loan types at the bottom too, which you will know because you know your student loan type, right? One of the three things that's very critical for you to know. And then last of our fixed repayment plans that are current, you've got the extended repayment plan. So borrowers must have more than $30,000 in unpaid loans to be eligible for this plan. And that needs to be direct or FFEL loans. Your payments can be fixed or graduated, so your loans are paid off within 25 years. And then you'll see the loans that are eligible for that also at the bottom. So this one's a little different. It's not nearly as common as some of the other plans, but there are some folks who fit this as well, who are looking to be in a fixed repayment plan. So those are the three fixed. Lots of people are more so interested in these, the income-driven repayment plans. And as was mentioned before, this lets you have a lower monthly payment because payments are based on discretionary income and family size, right? And so your discretionary income is going to be a formula between your annual income and poverty levels based on your family size. So it can be different for each situation or unique to your situation. There are several of these plans, as we mentioned, and it requires you to recertify your income every year to maintain one of these plans. So first, there's income-based repayment. You'll see there are some eligible loan types there. It's not all loans, as you can see. It can be pretty specific. And payments are either 10% or 15% of your discretionary income, pending when you received your first loan. All right, so that is going to be a big factor. Dating back to 2014, that's where that cutoff is. And we'll see more about that later. But this is one of the options for folks who want to have a repayment plan based on their current income level, as opposed to setting a fixed payment to pay off within a specific amount of time. Income contingent, this one's not as used as income-based, but it is another option. You'll see the loan types that are eligible for that as well. And then know that payments are 20% of your discretionary income, or the amount you would pay on a repayment plan with a fixed payment over 12 years, adjusted according to your income. So again, that's getting into a level of detail that you probably are going to dive into with a loan servicer or someone who's supporting you in figuring out student loans, or using a tool, which we'll talk about later, and knowing what your student loan option repayment monthly amounts will be, because that's very specific. So it's usually not something that folks are going to be able to grasp just by looking at for a few minutes. Some of these things take quite a bit of time to understand. And the last one we'll talk about is the pay-as-you-earn repayment, otherwise known as PAY. Also lots of complexities. You may be eligible if you were a new borrower or owner after October 1st, 2007, and you received a disbursement of a direct loan on or after October 1st, 2011. So there's complexity in even being eligible there. And then you have a shortened amount of eligible loan types to be able to qualify for this plan, which would leave you with payments that are just 10% of your discretionary income, but never more than you would pay under a 10-year standard repayment plan, which is usually a much higher amount. So these are all details that sometimes people are like, I really want to know this stuff and understand it, but you don't need to have this memorized, or really pay a ton of attention to it if you use the proper tools to help you figure out what the best plan is that's going to match your repayment goal. But sometimes folks want the details, so here they are. So I put this slide in here just really to point out that these things are super specific to the individual. So income-driven repayment is based on, as you'll see there, discretionary income for the IDR plans is the difference between your annual income and a percentage of the poverty guideline for your family size and state of residence. That tells you right away it's super specific to you. So if you have friends or family or others who say, like, I got on this repayment plan and it works great, you should do that too. The only way we know that's true is if your situation replicates theirs 100%, right? So it's complex. You need to focus on your situation, not necessarily what others are doing, because there are so many factors that go into this, including family size and the poverty guidelines and your annual income when it comes to income-driven repayment. The chart there just shows the different discretionary income percentages, which is also another level of complexity for folks who want to know this level of detail, which I would argue you don't need to know if you're using the right tools to be able to figure this out. But this is what's underneath it all. Same for this one. If you're comparing IDR plans, sometimes you'll hear old IBR, new IBR, and a different discretionary income there. So if your loans were before July 1, 2014, and you're on the income-based repayment plan, the discretionary income that your repayment is based on is less than if it was after July 1st, 2014, when you took your loans. And then you'll see income contingent and pay as you earn as well. So all that to say, very complex. You don't need to know all these things, but if you want to know what's pushing and influencing what your repayments are, that's the information. Okay, so we take a breather. We've been through phase one. That's from now through 2026, mid 2026. This summer, we've had a significant legislation that was passed, the One Big Beautiful Bill Act, that will change federal student loan repayment plan options. So we've already talked about phase one, that's current. What we're now going to get into is what happens in phase two and then phase three. The long and short of this is by 2028, many of the income-driven repayment options are going to be removed. You will no longer be able to be in the pay-as-you-earn income contingent or income retingent plan, or SAVE, which is already impacted. It's not taking any new signups, and ultimately you're going to need to move off of that as well. So those are the three things. If you're in those repayment plans, you will definitely be impacted and need to move off of those into something different by 2028. And that would be the midpoint of 2028. Okay, more important changes in this act. So there are new limits on borrowing amounts and loan types. So as I mentioned at the start of this session, there are some folks who are already in repayment, and then there are those who are maybe in high school looking to go to college or participate in higher education 2, 3, 4 years from now. When they look to attend, these new borrowers, they will have a different framework that they're working in. So the amounts that they're able to borrow is going to look different than for current borrowers. But as I mentioned, the best folks to talk about that are going to be the financial aid offices that you're looking at attending, whatever school that is. Talk to the financial aid office. They know this 100%. I could not recommend them more. For those who are currently in school, there's a provision for them. So if they're still completing their program and have had loans made before July 1, 2026, you can continue to borrow under current loan limits for 3 more years, or the remainder of your expected time to graduate, basically, whichever is less. So there's a provision in there that impacts some people, maybe not a lot of people on this call. If you're still enrolled and looking to finish your schooling, that's something that's important to know. For those who are in repayment, the bottom bullet is going to be much more important. And that's the new student loan repayment plans, which is a new standard repayment plan and something that's going to be the primary income driven repayment plan called the RAP plan, the Repayment Assistance Plan. So, as I mentioned, as of 2028, those 3 plans that were going away, those are not going to be options anymore. So, if you want to stay on an income driven repayment plan, the RAP plan will be a big option for you at that time. An important note, if you take any new loans or consolidate any new loans on or after July 1st, 2026, you're going to only be eligible for 2 repayment plans, the new ones, the standard repayment plan and the repayment assistance plan. So if there's a date that's important for figuring out if you're going to consolidate or take any new loans, July 1, 2026 is an important one. All right, so try and get things done by that date if that makes sense for your situation. All right. We're going to keep going through the information that's here, and then in a second, we're going to move to more of a modeling of an example to try and figure this out. So, as I mentioned, we had phase 1. We're now going to move into phase 2, which is mid-2026 through mid-2028. This is the phase that has the highest number of plans that are available to people. So you will have the current standard repayment plan, that's an option. You'll also have the new standard repayment plan, the graduated and extended repayment plans. Those are all those fixed repayment plans where the goal is to pay them off within a certain amount of time. So that's that category. So if you fit in that category, know that there will be lots of options within this period. If you don't fit in that category, everything I just said doesn't matter, right? If you're not looking to do one of those repayment plans, then you can sort of ignore that information. If you're looking for an income-driven repayment plan, then you can note that the pay plan and the ICR plan, which you'll have to move out of by 2028, they're going to slowly wind that down, so you won't be able to continue enrolling in those plans in phase 2. So if you're looking that's one of the plans you want, you definitely want to do so before phase 2 begins to be able to use it until you have to switch in 2028. Income-based repayment is different, and we'll talk a little bit more about that. And then, of course, the RAP plan, repayment assistance. If you're curious about what the repayment assistance plan looks like, this is what it looks like. So you will have a monthly payment of a $10 minimum. Everybody will have to pay at least $10 a month on their student loans. After that, it's going to be based again off your situation. So how much money are you earning? What is your adjusted gross income? And then you'll see a chart there. And it's also going to depend on if you have dependents, they'll subtract some money from your monthly payment based off that. And just really what your goals are. But if you look at that chart there, you'll be able to compare what your monthly payment might be based on your situation. And then you can multiply that out towards an annual level. So the chart's going to give you your adjusted gross income for the year. And then on the right side, you will have the annual payment that you will have. So if you make under $10,000 in a year, your annual payment will be $120. So you're going to have that on a monthly basis. So that's that $10 minimum. Everything from there after that is going to be based on your adjusted gross income and your situation, and that's going to depend on a number of things. Note that to have your loans canceled, if you're using this repayment plan, you need to be in this repayment plan for 30 years. Okay. And then you have the new standard repayment plan, which is for anyone who's looking at this is going to be dependent on what your loan balance is. So that's going to range between 10 and 25 years. And your payment is going to be highly dependent on exactly what you owe. And that differs from the current standard payment plan somewhat, but it's not as significant of a change as some of the other changes that we've covered and will cover. All right, so that's phase 2. Phase 3 is after 2028. It's 2028 onward. So I'll just go through these one by one. So if you are on the current standard repayment plan, you will be able to continue with that plan after 2028. All right. So if you are currently on the standard repayment plan, you can keep the current one. You don't need to switch to the new standard repayment plan after 2028. If you're on the graduated and extended repayment plans currently, you'll be able to keep those after 2028. If you're on the IBR plan, income-based repayment plan, you will also be able to keep those. All the other income-driven repayment plans you'll see are not on the screen because they're no longer an option. So you're going to have the income-based repayment plan be your primary option there. And then, of course, the new standard repayment plan and a repayment assistance plan that are new, of course, those are going to be available. So here's a slide that sums up what I just said. So if you have loans dispersed before July 1, 2026, and you don't take any new loans after that date, then you're going to need to be in one of the plans on the top there. You must switch to either the standard, and that'll be the current or the new, the graduated or extended, the repayment assistance plan, or IBR, which will be hanging around. If you take loans after July 1, 2026, or consolidate any loans after that, you've got two options, the new standard plan and the repayment assistance plan. All right, so those pieces are very important related to July 1, 2026. That's a super important date to be able to have things figured out if you are currently in student loan repayment. Okay, that was a ton of information, possibly too much, but I would rather give you all of that information so you have it and then you can reference back to it when needed, or if needed. Ultimately, the best place for you to go to figure this out, all those details, you can keep those in mind, but ultimately you're going to want to go to studentaid.gov loan simulator and figure out what might be the best situation for you. So to that end, I'm going to go through an example there just so everyone's able to see it. All right, so let me open this up. All right, so this is studentaid.gov. One of the things to note about this loan simulator, and there's not really a better place to go at the moment, is that this loan simulator does not have information about, so if you're planning and you're like, I want to look ahead to 2026 and 2028, and I want to understand the new repayment assistance plan and the new standard plan and how that fits into things, that information has not been added to this loan simulator yet. It just hasn't. So if you're going to do this, you're basing this on the information for phase 1, right? So that's the limits of this loan simulator at the moment between now and July 1, 2026, as opposed considering which loan options are available. So we'll just go through an example. I'm going to click start from scratch here. This is a key part, right? So which of the following apply to you? I'm going to say I filed taxes in the last 2 years. I have a job or plan to get one soon. I save for retirement, but will pay on it later. I pay health insurance premiums through my paycheck. Those are the things I'll check in this example. And I'll hit continue, continue. I'll say I'm single. I'll say I live in the great state of Wisconsin. And for this, I'll say I make $50,000 a year, and I'll also just go with the standard 3% income bump. Obviously, you can change that however you like. I'll say I pay $7,000 a year towards my IRA, an individual retirement account. And how much do I pay in health insurance in premiums each year? We're just going to go, let's say I pay 3,500. This is going to be super specific to your situation. Then you have to add your loan types. So I will say I have a direct loan at that rate, and I'll say I've got 30,000 in loans. And then you save that. Then you hit continue. And this is a question that's going to be specific to your situation as well. Do you have public service loan forgiveness in mind? So do you work for a nonprofit or a government entity that qualifies? I'm going to say no. And then click continue. And then it gets back here. What is your repayment goal? You need to have this figured out. But for now, I'll say I don't have a specific goal, so you'll see what happens with that. So if you do that and then hit continue, it switches it to pay the lowest amount over time. That's its default goal. So you will want to know more. But even if you do that, you still be able to compare your other options down at the bottom in terms of what your monthly payment plan will be, how much you'll pay off, so on and so forth. So that is a key tool to use as you're thinking about student loan repayment. So that's something I would encourage everybody here to do at some point in the near future. If you're thinking about student loans, use that simulator. All right, if we go back, and as I mentioned, the new RAP plan is not included in that information. So if you want to use a plan that also, or a simulator that also will give you some idea about the new RAP plan, you have to go away from studentaid.gov to do that. And we'll make sure you get this link. We might be able to get it in a chat for you as well. But this is the simulator that you'll want to use. So or the calculator, I should say. You put in your loan balance, your interest rate, your adjusted gross income. You can find, and you don't need to have all this just to this is low stakes using this, right? So if you're like, well, I don't know 100% what my adjusted gross income is. I don't have my tax documents right now. That is okay. This will give you an idea towards that. So there's a question, what repayment plans count towards PSLF? Income-driven repayment plans are the ones that are focused on that. Because if you're looking to do a fixed repayment plan, the point of doing those is to pay off your loans, generally speaking, because they pay off your loans in 10 years or less, generally speaking. So you usually want to do an income-driven repayment plan if you want to do that. Yes, all income-driven repayment plans, in theory, are eligible for public service loan forgiveness. Here's something to note. That is in constant discussion within the current administration. So what's true today may not be true tomorrow related to which plans qualify for forgiveness. Under an income-driven repayment plan, there's cancellation at the end of those. That's different than public service loan forgiveness. So I want to separate those two things. So if you get on an income-driven repayment plan and you pay for the extent of that time frame, and you still have a balance at the end of that, then your loans can be canceled. That's different than I work for a nonprofit or a government entity, and I did that for the 120 payments, and now my loans are going to be canceled. Those are not the same thing, and sometimes those can get a little bit confusing. And yes, all the links are going to be emailed to you. You will get them all. All right, so I'll move on because we only have a little bit of time left. I'll make sure we get through everything. So can I pause student loan payments? Um, the answer depends on your situation, but there are programs for you to be able to do that. So there are two different ways to quote unquote pause your student loan payments. One is deferment, and then the other is forbearance. The difference between the two, especially if you have direct loans, right, is going to be that no interest accrues with the deferment and interest continues to accrue if you are in forbearance. For deferment, there are common programs that people might work with their servicer on to be able to defer their student loans: economic hardship, unemployment, cancer treatment, and rehab are the options there. And there are applications available to that. Again, you'll get all the links to that. I know it's tough to follow all these links that might be in the chat, but we'll get them in there as we can. But those are the links to direct applications for deferment. Forbearance is different. You really are going to want to work with your servicer on that. And ultimately, it's a little bit more open as to what may qualify for those. Financial difficulties, medical expenses, change in employment, and then quote other reasons acceptable to your loan servicer. So that statement in itself tells you how broad and flexible that possibility can be. So keep that in mind. You do have these options if for whatever reason the best thing for you decide is to pause your student loan payments. You do have options. Okay. Avoiding student loan scams. I think I'd be remiss if I didn't mention this because student loans are very challenging for a lot of people and are so complicated. At the moment, people need help with them. For a lot of scammers, that's an opportunity. So you may see things about, hey, we'll take care of your student loans and then you don't have to worry about them again. We'll take care of it for you and you won't have any payments, or you'll have a super low payment that you haven't been able to get up until this point. If something sounds too good to be true, then often it is. So you definitely want to look at the red flags that are on the screen here: charging upfront fees, pressuring you to decide quickly, asking for personal information over the phone. Any of those things, not ideal, especially if they ask you to sign something that gives them the ability to do things in your name. Like, just think about these things. And likely, if that happens, I would like you to talk to one of the resources that we're going to talk about in just a minute, for you to be able to take the next step here. All right, so there are several resources. I'll show some of them. So there's the Wisconsin Student Loan Debt Coalition, Student Loan Borrower Assistance, which had that video. They made that video that was shown at the start of our session. There's the Institute for Student Loan Advisors, and then there's also an organization that actually the state of Wisconsin has partnered with to help people to be able to figure out student loan management. All right, so let's go through some of those. So let's see if I can get to that. All right, give me just a minute here. Figure that out. All right, so here is the Wisconsin Coalition on Student Debt. So it's a student loan helpline with a number that you can call and emails that you can send. And they've got obviously a lot of the information I've mentioned, that this confusion and details is at an all-time high, and things that they will do to help you. And they will talk to you about your situation. So you can talk to a live person. So if you're having issues with your servicer, or if you're having someone promote some things to you and it doesn't sound quite right, it's a great idea to reach out to the Wisconsin Student Loan Debt Coalition to take that next step in figuring some of these things out. But that's just one option. You also have a few others. So, yep, so you've got this option as well, right? So you've got the Institute for Student Loan Advisors. All right. And so you can contact them. They're available Monday through Friday to answer personal student loan questions. All right. So they've got a couple of different categories. If you're a borrower with questions about your student loans, you can send questions to their email. And if you're a borrower with who has a dispute about student loans, then they've got a different path that they want you to take. So this is another place you can go. That's by professional student loan advisors. And is a great option for you. The downside of this one, they don't provide any phone service, and that's obviously different with a helpline, right? So the student loan helpline through the Wisconsin Student Loan Debt Coalition is different. So it just depends on what you're looking for. But this is another resource that's free student loan advice that's vetted and something that you can think about. And then certainly last but not least, we have this here, which is basically an online program that you can use. So you could go to this website here by Savvy. And let's see, expected income in 2025. Again, I'll put 50,000 and I'll say my student loan payment is currently $300. You do that. It'll take you through a few screens where you answer some more questions to try and help you get to what might be the best option for you. So it'll ask you what state you live in, so on and so forth. You put in your personal information, and then it'll provide you with a suggestion about what could be a good fit for you. And again, this is through a partnership with Wisconsin. So another online tool that you might want to look at considering. All right, so those are the resources. And then to review, here are your student loan repayment planning steps. Because again, it's easy to get lost in the details with student loan repayment. But if we're gonna really narrow this down, this is the summary. You need to know your federal student loan types. You need to know your servicer. You need to have selected what your repayment goal is. With that information, you can work through the simulator at studentaid.gov and use the resources that are available that I've shared to determine which repayment option in phase 1, phase 2, and phase 3 that we went over is best for you. And of course, you're going to want to use studentaid.gov or your loan servitor to set your repayment plan, to like actually put it in, to implement it, to set it, to make it real. Those are your steps. So all that information I went over is great. Ultimately, these are the things that everyone can be helped by doing to manage their student loan repayment. Okay, so that was tons of information. I'm going to put the evaluation on the screen here so folks can navigate to that to provide us some feedback about today's session and more information that you want to share. As I mentioned, this is a ton of info and this is a lot to manage. So know that it will take time to grasp all this. But there are resources available to you to do so that we went over just the previous slide, and then also referencing this this session's information as well, which you will get. So link is added to the chat. And then at this point, I will stop the recording.